Okay, let us now understand the concept of actual cost. So what do you mean by actual cost? And what is the relevance of this actual cost? Now what happens is that you would have seen earlier that your depreciation for income tax purpose is allowed on the actual cost. Okay? So therefore it becomes very important to understand this concept of actual cost. Because if you don't know what is the actual cost, then basically how do you claim depreciation? And hence comes the question of ascertaining actual cost of an asset. Now, let us see first as to what do you mean by actual cost. Okay? Actual cost means, so it means actual cost of the asset to the assessee. So whatever the assessee has spent, whatever is the cost to the assessee. Now what you mean by cost is something which we will see as we move forward. I'll just explain it to you. Reduced by that portion of cost, if any, as has been met directly or indirectly by any other person or authority. Let's look at it like this. Okay? Suppose I bought a plant and machinery for rupees 5 lakh. Okay? Plus I incurred certain freight in bringing the machinery, let's say 50,000. Plus there was an insurance, transit insurance, let's say another 50,000. Plus let's say there was installation charges, let's say 1 lakh. So what is the total amount I have spent to get this machinery? It's the sum total of all these four numbers, which is 7 lakh. So this is my actual cost of asset. I'm not considering any interest or something because currently I'm just explaining to you the concept of cost. So the cost means whatever I have incurred. Now suppose I was in a particular area where the government wanted to give certain kinds of incentive. They said, okay, I will give you a subsidy of 50%. So they gave me a subsidy of 3,50,000. They reimbursed this money to me. And what I paid out of my pocket was only 3,50,000. Now let us revisit the definition that I told you earlier. Actual cost means actual cost of the asset to the assessee. What was the actual cost in this particular case? It was 7 lakh. Reduced by that portion of cost, if any, as has been met directly or indirectly by any other person or authority. So if the government paid me 3,50,000, then the total payment I made was only 3,50,000, and therefore my cost for the purpose of depreciation will be 3,50,000. Okay? And I will get depreciation only on 3,50,000 and not 7 lakh. Now, when you compute the actual cost, one of the most important thing or the controversial thing is what portion of interest am I supposed to capitalize and what part of interest am I supposed to expense of. Now, what is the difference? I mean, why is this important? The reason why this is important is that suppose you bought a machinery for 7 lakh, okay, as I took in the previous example. In that example, basically 3,50,000 is what I paid. 3,50,000 was reimbursed by the government. So let's say Out of this 350,000, I took a loan at the rate of 10% per annum, or 35,000 of interest per annum. Now, if this interest is added to the cost of this machinery, 3,50,000 plus 35,000, 3,85,000. What will happen is I will get depreciation on this. So on this 35,000, whatever is the rate, let's say the rate is 10%, I will get 3,500 as depreciation over a period of time, year 1, 2, 3. Whereas if this interest is construed to be of revenue nature, then the entire interest will be allowed as a deduction in year 1. So when I suppose I had an income of 100,000, I reduce 3,500 out of it, my income becomes 96,500, and I pay taxes on this. Whereas if this is if it was capitalized. Whereas if it were revenue, I will reduce 35,000 from here, and I will pay tax only on 65,000. Right? So therefore, it is very important to understand as to whether this is revenue in nature or capital in nature. Now, for this purpose, there are certain things which you need to understand. First is the date of acquisition. Okay. Second is date of asset being put to use. Now, if I acquire an asset from one, and this is in the case of existing business. I'm first doing existing business. Suppose I acquire an asset on 1/1/2011, and I start using it because you would have seen earlier that there was an installation also being done. Suppose the installation took 6 months, and the asset was started using from 1/7/2011. Now my interest will start from this date, and the meter will keep on running from here to here and from here to here. For income tax purposes, any interest which is paid from the date of acquisition till the date when it is put to use is capitalized, and any interest that you pay after this date is allowed as a revenue expenditure in case of an existing business. Please note, it is in case of an existing business. For a new business, there is a little bit of a difference, which I'll just come back to you. So in case of existing business, interest up to the date the asset is first put to use has to be capitalized, and interest after that date is a revenue interest. Now, what happens in case of a new business? Now, in a new business, what can happen is, suppose you acquired plant and machinery. Let's say acquisition was again done on 1/1/2011. Now this machinery was installed, let's say, as we took in the earlier example, as on 1/7/2011. Okay, installed. And the commercial production started on, let's say, 31/12/2011. Now, for computing your profits and gains of business and profession, the business should have been started. So therefore, when you compute your income under the head PGBP, income from PGBP will start only after you have commenced commercial production. This is again in case of a new business. Okay. So if the income itself is starting from 31/12/2011, then you cannot have depreciation or any expense prior to that date. So then what happens is that your interest for this period plus this period till the date the commercial production start, this entire interest is capitalized. So this plus this is capitalized. And it's only on the balance that you claim a revenue expenditure. So any interest pertaining to this period will be capitalized, on which you will claim depreciation, and for this it will be revenue in nature. Let's read this out. New business, interest up to the commercial date of production. Capitalized interest after the date the asset is first put to use is revenue in nature.